let's also welcome Sharan Linani, who's the independent SEBI research analyst as well. Sharan, help us with your understanding on this particular IPO, and along with that, what is your recommendation on this?
Good morning, everyone. Like Abhishek explained very well, the company is totally dependent upon the PM Kusum scheme. So I would like to go a little in the scheme. The scheme ends March 2026, which is just around the corner. The scheme was started in 2019, which was extended till 2026 because of COVID. Now the scheme says the government had given some benefits to plant around 1.2 million solar pumps. Now already till March 25, around 0.8 million pumps have already been installed, and I think by 26 the target will be achieved. So I don't think the scheme will be extended any further. Now the company's major revenues only come from this scheme, around 87%. So I don't know what their plan is for the future. Again, if you see their peers like Shakti Pumps, Kirloskar, they are very diversified. In Shakti Pumps, has around 20% of their revenues coming from export. So even if this scheme shuts, they are more or less well equipped to handle a closure of such a scheme than this company. So I would be very cautious. My rating would be very cautious on this company because it is very much dependent upon PM Kusum. And one more thing I would say is like companies like this who are very dependent on one scheme or one product, like you would say, take E-Protein government. It is more or less dependent upon the PAN work from the government. Now the government didn't extend their contract to see what happens to companies like that. Sudden 30, 40, 50% decline in the stock prices. So I would give a very cautious rating. If the company plans or diversifies in the future, then we would definitely review it.
All right. Thank you so much, Sharan, for getting us all those details regarding and highlighting how do you look at this particular IPO as well. But with this, viewers, let's get back to the markets then and just have a look at what we are up to. So for now, we see that Nifty as well as Nifty Bank, they are once again in the red zone. What we see is that Nifty is now around about 54 odd points, hovering around that 25,100 mark, while Nifty Bank is also holding on to the cuts of 31 odd points. But it's Asian Paints all the way, that is up almost 2%, followed by ONGC, and along with that, Sun Pharma, Bajaj Finserv, Apollo Hospital are some of the gainers as we speak right now. On the flip side, it's Infosys, HCL Tech, as well as Tata Steel that are in the red zone. So all in all, we are in the red zone, as well as India Wix is inching higher with 1.5% of the gain as we speak right now. But Sharan, since we have once again with you, give us some more sense on how do you see the key concerns for the Oswal IPO. Along with that, just yesterday we did touch upon the TT Limited IPO as well. Help us with your understanding over there.
So Shristi TT Limited is coming up with the right issue. It is a textile-based company. But over the years, just to survive, it had to sell its assets. Over the last 10 years, revenue has gone from 700 to just 200. There is no profitability. There is no cash flow. FY24 PAT is 4 crores, that too because of 18 crores other income. So there is nothing in this company to see. Their interest cost is very high. They have a debt to equity is also very high, 10 crore of interest cost every year, which I don't think the company will be able to pay. So more or less, it's a very, very weak company, very weak financials.
Let's look at this rights issue that Sharan just spoke about, TT Limited, which is in focus. Should you be subscribing or avoiding? Sharad, my research analyst, is here with his analysis about the key concerns regarding this rights issue.
In focus is TNT Limited, and just to ensure transparency with our viewers, this is the first time ever this company is being covered on air in this channel. Now, interestingly, we have added this company in our software, and it seems like the company is planning a loot in their rights issue. Now, we did an analysis from our research team, and over here we could say that there is a weak and poor fundamentals in every almost parameter of the company. companies, if you look at a balance sheet on a P&L, key concerns include a weak operational numbers, cash flows are questionable, they are over leveraged with heavy debt and a poor interest coverage ratio. Subpar returns coming in for the capital and equity segment, and a weak cash currency conversion coming, and also constrained liquidity seeing all across. Of course, a big dip in the profit numbers and sales numbers also seen if we compare the FY24 and the FY25 numbers, and the operational headwinds are also coming in from cost, staff turnover and the competitive pricing pressure as well. So it's important that you stay cautious when it comes to the rights issue of this company.
Okay, Sharad, thanks for highlighting all of those concerns that are surrounding the TT Limited rights issue. But Sharan, what would you make of this rights issue in your opinion? Now that Sharad has highlighted all of these concerns, would you recommend a subscription for this rights issue, or would it be an avoid from your end?
It's an absolute avoid, and looking at the financials of the company, I find it difficult for the company to be a going concern also. So please absolutely avoid this right issue. And even if you're invested in the company, I would suggest to exit this company.
Right. Okay, Sharan, good to have you on the show. Thanks as always for your time on Oswal Pumps IPO and of course TT Limited rights issue as well. We'll take a very quick break. Come right back.